guys, this is SyntheticGoddess. In this video I want to quickly explain supply and demand zones. Alright, I know most of you have heard about supply and demand zones, but then you don't really know how to figure them out, or maybe you know how to figure them out but you don't know the valid zones. This video is really going to help you to recognize the valid zones and how you can figure them out. So please like, comment, and then subscribe if you've not subscribed yet, so that you can see more of the videos I am going to drop. So I need you to follow me till the end so you can quickly grab whatever I am saying. So when we talk about supply and demand zones, they literally move the markets. Yes, because market moves from a demand zone to a supply zone. A market moves from a supply zone to a demand zone in the market. So that is basically what moves the market. So you really need to be able to recognize them. And talking about supply and demand, they are actually patterns that prices makes in the market. They are patterns, like recurring patterns that occurs in the market most often, and then they are always created by the activity that occurs in the market. And the activities that occurs in the market are basically just buying and selling. Those are the two activities we have in the market: buying and selling. Buying and selling are the activities we have in the market. So the demand is always represented by buyers and supply is always represented by sellers. I'm going to say that again. Demand is always represented by buyers, while supply is always represented by the sellers. So let's quickly move to how you can recognize these zones. Now note that demand and supply zone doesn't move on their own. They cannot stand on their own. You can't use supply and demand zone on their own. You need to apply them with other concepts to make them work. Because if you just mark out your supply zone and then the market is in another trend, it's really going to cause a whole lot. Yes, and then you will end up frustrated and say supply and demand zones doesn't work. So you need to mix them with other concepts. So okay, let me just use this pair and then we see what to do. Okay, so in this pair, now I'm going to talk about how to identify supply and demand zones, but let's just mark the last break of structure. You know, as I always said, mark out the last break of structure and then to let us know where we are in right now. All right, so basically we are in an uptrend over here. So how do we recognize our supply and demand zone? First, you have to look for a place that is balanced, a balanced zone. When we talk about balance, it means a consolidating zone where the market is actually consolidating. You have to look out for it, because before the market moves, before the market gives an impulsive movement, it's definitely going to give a demand zone or a supply zone. So for this market, we are actually looking for a demand zone because we are in an uptrend. Remember I said buyers are always used in representing demand and sellers are always used in representing supply. So let's take for instance we are in a downtrend. We are just going to be looking for a supply zone, but right now we are in an uptrend, so we are basically going to look for a demand zone. That is what we are going to look out for here. Now, to identify your supply and demand zone, first you need to look out for the area where we had consolidation. When we talk about the consolidation, it simply means where the buyers and the supply and the sellers are equal. I mean, where buyers and sellers are equal. That's the equilibrium price. That's the equilibrium price, where they are equal. That is your consolidating zone, because we don't have much buyers in the market, we don't have much sellers in the market. They are just equal. So that is the reason we always have a consolidating zone. So if I am to mark out a consolidating zone here, from here to here is our consolidating zone. From here all this area from here to here is our consolidating zone, because if you look out on the 4 hours time frame, or let's say on the daily time frame, you only see, yes, you can see it is only presented on just one candle. It is only presented on just one candle. So this is my consolidating zone. Perhaps if you check the 4-hour time frame also, you can see that it is really consolidating. We don't really have the strength of the buyers, we don't have strength for the sellers, so we are just consolidating over here. From here to here is our consolidating zone. So if you are going to mark it, basically it is the best for you to mark out the place that it started consolidating from till the end of the consolidation. That is how to mark your supply and demand zone. To mark it out from the first place it started consolidating from till the last place we had impulsive movement. Okay, to the last place we have impulsive movement. So, and also how we recognize supply and demand zone is that the imbalance are identifiable. Okay, the imbalance are identifiable. You will see it that after the consolidation we have imbalance, like we have straight imbalance, either a very big candle or series of candles that are very impulsive. That is what is going to validate your supply and demand zone. And as you can see here, we had 3 impulsive movements to the upside. 1, 2, 3. Those are our impulsive movements. So this zone is very valid. Also, you can see this zone also. This is a very good supplies. This is a very good demand zone. Rather, it's a very good demand zone, because as you can see, we had consolidation, and immediately after the consolidation we had 1, 2, 3, 4 movement to the upside impulsively. In fact, it's on the 4 hours time frame. So this particular supply zone is also very valid. You can mark this supply zone out. It's also very valid because we had consolidation over here before the impulsive movements. And when we check out the 1 hour time frame, you can see this is the 1 hour time frame. You can see the consolidation is very clean and very clear. So you can just mark out the consolidation areas before the impulsive movement. This is our demand zone, and it's a valid demand zone. And also we had a liquidity grab before we moved to the upside. We had a liquidity grab here before we moved to the upside. I think we're going to talk about the liquidity grab later. We'll talk about the liquidity grab later, but then for now, let us just look out for our consolidating zones and the impulsive movements we had, so we can be able to recognize our supply and demand zone. So this is a consolidating area, and if you check the 4 hour time frame, it's really obvious that this is a consolidating area before the impulsive movement. So this is a valid demand zone. So if I'm going to mark it, I'm going to mark it from the beginning of the consolidation till the end of the consolidation, because the market can just decide to use the beginning of the consolidation. The market can decide to do something like this. The market can decide to do something like this, just touch the tip of the demand zone and start flying up and start flying to the upside. Market can decide to do that. So you have to mark it from the beginning of the consolidation till the end of the consolidation. So I'm going to mark it out here. This is the beginning of our consolidation. This place, okay, this place, this is the beginning of the consolidation, and this is the end of the consolidation. So if I'm to mark it out, I'm just going to mark it out this way. I'm going to mark it out this way because it is more valid this way. So if you want to refine it, you can just go to your lower time frame to start refining and see where the impulsive movement started, and to mark out your order block. Yes, and if you know other PO high, you can actually mark it out, because here we basically have 2 PO highs. We have the secondary PO high, which is here, This is my own secondary PO high. If our market has not gotten there yet, this is my secondary PO high, and you can just decide to mark out my secondary PO high and then mark out my primary PO high. It depends. Like you just have to look out for confirmation in the market. I will always say that look out for confirmation on the lower time frame before you just jump into the market. And once I notice that there is no confirmation, I don't trade the market. I leave the market alone to perform whatever it wants to perform. The market is not running away. There is a series of opportunities in the market for me to take advantage of, so I don't run after trade. I wait for the trade to play out according to my analysis, and if it doesn't play out, I just leave the market to move. So later on in other videos, I'm going to talk about confirmation, what you really need to see whenever you want to take a trade, the pure confirmation. You really need to know confirmation before you just take a supply and demand zone. So as you can see, I have marked out my supply and my demand zone over here. Yes, I've marked out my demand zone over here, and market might decide to use a breaker block. Anyone, it might decide to use a breaker block. All I just do is wait for confirmation. So once you are able to mark out the ranging area, once you are able to mark out the consolidation area, which means buyers and sellers are at peace at that point. Now you need to look out for the breakout. Where is the breakout of the consolidation? This is the breakout of the consolidation that I marked as my break of structure. You can see this is the breakout for the consolidation market. Since I am able to recognize that, now I'm able to pick out my POI. So I'm able to pick out my POI. Now, for you to identify a demand zone, you really need to look for a larger candle or series of candles in the same direction. You can see this move to the upside. We had less of black candles, which implies the bear move. We had less. You can see 1, 2, 3. We had just 3 candles that are black candles that are for bear candles. So it simply means weak sellers. We have weak sellers in this particular market. 1, 2, 3, and then the end 4. Now you can see we can mark this out as our demand zone, also our supply zone rather. This is a supply zone over here. You can see this consolidation. If you check the lower time frame, you are going to see this as a consolidation. This is a consolidation over here. It's a consolidation. I could just mark it out and then wait for the market to get there, but then I am not marking this supply zone out because we are in a buy momentum, so I'm not taking any risk. For a supply zone. I'm marking out just demand zone simply because I already know the trend of the market, so I'm not going to settle for the market to deceive me. So what I'm just looking out for is the demand zones. And you can also see here, immediately we had this range area broken out. We had it like the market broke it. The market broke out the ranging area, and then we had series of move to the downside with little bull in control. As you can see, this is the only candle after the breaking out of this range zone. This is the only candle that actually formed after the breakout of the candle. So just okay, let me go to other pairs so that we can mark out our supply and our demand zone. We can mark out our supply and demand zone over here. So yes, this is a valid supply and demand zone. I'm coming. Let me just mark out the break of structure. So we had this break of structure formed over here. We had this break of structure formed over here. This is the break of structure formed over here, and as you can see, we had series of consolidation. The consolidation started from here and ended here before the breakouts. You can see. So this is my valid supply and demand zone. If the market would respect it, in fact the market actually respected it with this candle. The market respected it with this candle, and we moved a little to the downside, but then the market decided to break the supply zone. The market decided to break the supply zone, yes, and I've not gotten a confirmation. I wouldn't have entered this market. So we have a break of supply zone already. Since we have a break of supply zone already, so what we're looking out for is a demand zone to continue to another supply zone over here. What I'm looking out for next is look for a demand zone continue to a supply zone that can be used to continue the sell momentum. So the market has broken this particular supply zone that we marked out here. The market has broken it. Yes, the market can break supply and demand zones. So you really need to wait for confirmations before you enter the market. Always wait for confirmation before you enter the market. On the lower time frame, it hasn't really given us any confirmation to enter this market at this supply zone, and then we can have deceptive confirmation also, because it is actually a strong supply zone. The consolidation happened for a long time before we add the break of structure to the downside. The consolidation happened for a couple of minutes before we had the basic move to the downside. So it was actually a very strong supply zone. It was actually a strong supply zone, and basically the market is going to just deceive some traders in here to just enter the market anyhow. But then if you keep watching my videos, you will definitely not be deceived by what this market just did. You will definitely not be deceived. So I'm going to be ending the video here. I hope you've been able to recognize your supply and demand zones, and remember, you are waiting for a consolidation and a breakout of the consolidation before you mark out your zone, and you are marking from the beginning of the consolidation till the end of the consolidation, because the market can just decide to use the tip or the beginning of the consolidation to continue its movement. So that is it, guys. Keep living in the atmosphere of profits. Thank you very much. Kindly like, comment, and then share to your friends to also benefit. Thank you, and have a nice trading week.